Hello everyone, and welcome to today's learning session, REDD Finance, organized by World Wildlife Fund's Forest and Climate Program. Thanks for taking the time to join us. My name is Green Burns, and I'm a Program Officer for Learning and Communication. As you can see, our presenters today are Berta Pesti of the UNDP REDD Programme and Jacinto Coello of the UNEP UNEP Finance Initiative. So before we begin, I'd like to share a few housekeeping tips and reminders for you. Today's presentation is being recorded, and you can access the session recording within a few days on our YouTube channel. To find the recording, simply go to youtube.com and search for WWF Forest and Climate, or go to panda.org/forestclimate and look for the REDD Learning section. There are two audio options. You can listen via your computer speakers or dial in through the number that was provided in the registration email. It's important to note that if you experience audio difficulties while you're listening via your computer, this can be caused by having too many software or internet windows open, so feel free to close some of them, and that usually solves the problem, or you're always welcome to join via phone. If you're having any technical troubles, please send me a message via the chat area if possible. Questions are absolutely welcome. Please submit your questions for Berta and Jacinto through the toolbar on your screen, and we'll answer as many questions as possible during our allotted time. For anything that we don't get to cover, you're invited to post them to our online REDD learning platform, reddcommunity.org, and after the webinar, you'll receive a link to the place on REDD Community where you can post your questions. So thank you again for joining us, and with that, we'll get started. And at this point, I will turn it over to Berta.
Thank you very much, Green. This is Berta Pesti from UNDP, the UN-REDD Programme. Good morning and good afternoon, good evening to everyone. I'm sitting here in Geneva, and I will make the first presentation, but before moving on to the presentations, I would like to just quickly summarize the 5 topics that we would like to cover here today. The first one is about supporting national management of REDD Plus funds, and the second one is designing optimal management arrangements. These are the 2 topics that I will present, and then I will hand over to my colleague Jacinto, who will present you key private sector lessons on results-based finance. We'll explain what should REDD Plus results-based finance look like, and what the conditions are that are needed by the private sector to scale up. So I actually turned these first 2 points into three questions that I thought I would present to you based on the experiences that we have been having here at the UNEP program and at UNDP. Me personally, I'm in charge of supporting countries in finding national fund management arrangements, country distribution systems, national fund development. So I thought I would bring you some experiences and points and lessons from this work that I'm doing. So the 3 topics that I would like to cover today are based on the support that we're providing in the framework of the UNEP program. And the first one is basically how to design optimal REDD Plus fund management arrangements. The second one is how to support the setting up of national REDD Plus funds, and the third one is basically about sharing experiences and knowledge among the countries that are currently thinking about implementation modalities for REDD Plus. So let's start with the first issue is what kind of support we're providing, and what kind of questions and issues come up when countries try to design optimal fund management arrangements for REDD Plus. So basically, the biggest challenge, I think, is that there are many choices that need to be made when countries are designing how to manage REDD Plus funds. And basically, some of them, the most fundamental ones, are whether the country is going to use existing structures, existing fund management structures, or they're going to create new ones. If they use existing ones, which ones would be used? And or often the question is, an existing structure is not optimal or appropriate in the way it is structured currently, but maybe some parts of it could be used. And then also there is also a choice to be made whether the country is using budgetary systems, extra budgetary solutions that exist already in other sectors, or even in the field of environmental protection and forest management, or they're going to rely on market-based instruments, or they're going to use a combination. And if they use a combination, for what kind of interventions they're going to be using, which kind of instruments. So, because these questions are quite complex and complicated and need a lot of reflection, a very rigorous analysis is necessary, and the kind of support that we're providing is basically to walk this this analysis with the countries. So the first step of this analysis is basically to know what your needs are, because before designing any kind of implementation modality or fund management arrangements, you need to know what you're going to be using it for. And this is a process that is happening. It's a parallel process. It's an iterative process. It's not like you decide one and then there's a next step and a third and fourth step. Usually there are a lot of feedback mechanisms that make it a very complex process. But I try to break it down for you to a couple simple steps to sort of get an idea of how it could work. So the kind of questions that we usually ask when we work with countries on this first step is, what kind of sources, funding sources you expect to mobilize? So what kind of funding you're going to be channeling? Is it, just public funding, or do you intend to mobilize private sector funding? My colleague Jacinto will present a lot of the different criteria and expectations that need to be fulfilled before private sector money can flow into REDD Plus. But also from basically a fund management implementation modality point of view, that public funding and private sector funding have different requirements. So you have to design your structures accordingly. Same thing, do you only want to rely only on international funding, domestic funding, or a combination? Because there again, you may have different standards and expectations that you need to consider, and maybe the existing structures that you have are only capable of capturing, one kind of these resources. So it's a very important question to answer. The second question, and let me warn you, sorry, so I'll go back to step one. It's just the second question of step one. That all these questions that I'm mentioning here are not exhaustive. It's not an exhaustive list of many questions, but I thought I would just highlight the most important ones. So the second one in this first step is second question in step one. Can you go back to the previous slide? Thank you. Is what kind of disbursements you wish to make? Are you thinking about having a purely grant-based modality, or actually thinking about making investments, so making returns, and either having equity investments in projects, or providing loans, or credit enhancement type of products? Because again, these kind of products are going to have different kinds of fund management structures that will be required for them. Same with the size of the payments. Whether you think you will be making very small scale payments, I don't know, $1,500 per household, or are you thinking about using REDD Plus money to support large scale investments that would cost millions of dollars? Obviously, depending on what you're going to do, you're going to have a different structure. Next question still in this first step is who your beneficiaries will be. Are you going to disperse to households, communities, to companies, government, NGOs, aid agencies, or all of them, or a combination of them? again, it means that different people will have, different kinds of entities will have access to your fund that will require different kinds of, to your fund or to the disbursement modality that you select. So you will need to have procedures that cater for all of these different types of entities. And maybe you will need intermediaries. You will not be able to access directly all these entities that I have just listed. So you have to think about that as well. Another question still in this area of knowing what your needs are that you're going to be doing with your funds is what kind of projects you wish to support. We have seen with the different national funds that are being set up is that there are actually quite a diversity in the kind of projects that they're supporting, from capacity building, policy reform, actually investments in infrastructure, carbon projects, etc. Again, same thing. These different projects are going to require different kinds of structures, different kinds of operational procedures, different kinds of safeguards, etc., to be put in place when you're creating your national fund management structure. And the last important question in this area that I listed here for you was, as I said, there are many others, but a last one that I wanted to mention to you is also who you want to involve in the decision making, because again, some of the fund management arrangements, say, for example, using the channels of regular budgetary processes, may not be appropriate for multi-stakeholder approaches. Certain constituencies, certain stakeholders will not be able to participate in decision making, so you may have to consider using alternative solutions. So in light of all these questions, then you move into step one, and you assess what you have. So after having at least a general idea about what you need, let's look at what you have, and look at the different kinds of modalities that I mentioned, budgetary, extra budgetary, market-based, etc. within your countries that exist already and that have been functioning, and maybe not in that context, and maybe not in an environmental context. There are a lot of extra budgetary funds that work on work in other sectors whose experiences may be relevant. So it's good to look a little bit outside the traditional realm of REDD Plus and forest sector, and look how these modalities ensure coordination with national policies. So REDD, the implementation of REDD will require coordination among a lot of different sectors. So if you actually assess the different funding modalities as not being able to coordinate efficiently among the different sectors, then that may be a strong enough reason to opt for a different kind of modality. Typically, if you're having extra budgetary solutions that involve only one specific government agency in the decision making. In their decision-making bodies, usually then it's very difficult to coordinate with other policies and other government agencies. Are the modalities transparent? Remember in the previous slide I was asking the question what kind of funding resources you're going to mobilize. One of the important conditions of international funding is that the modalities will have to be transparent, the way the funds are raised, the way the funds are spent, how results are verified, etc. So if you find that the existing modalities that you're looking at are not sufficiently transparent, then again that might be a reason to look for alternative solutions. Another important question, again going back to this issue where you think you're going to be raising funds from, is in the existing funding mechanisms that you have in the country, where the funds come from, where that modality is actually capable of receiving funding. For example, can private sector or foundations or other non-public entities contribute or not? Because if you think that you would like to tap into that funding resource and the modality that you're thinking about choosing is not capable of accommodating that, again, you have to either eliminate or make adjustments. Similar, what kind of disbursement capacity is the modality capable of disbursing to, many little households, if this is what you want to do, that are scattered in your country, or is the modality, capable of disbursing to business enterprises or not? Because again, if this is what you want to do and the modality is not capable of doing that, then we have to look for other alternatives. Same thing about the size of the disbursement. We mentioned that on the previous slide, or also the kind of payments that you want to make. Again, some kind of very innovative payments like derivative contracts on carbon credits, etc., may not be feasible using regular budgetary systems, or even just funds that are housed within a government agency. Another important question: how efficient the procedures are, how complex the decision-making and monitoring and reporting procedures, because if they're complex, not only they can cause delays, but it means that maybe whole processes would be stopped definitely because there's a conflict between the different stakeholders who are participating in the decision-making, and they cannot find a solution. How lengthy the procedures are. Again, it's a major constraint in publicly managed funding modalities, that usually they take a long time, not only to get things approved, but from the approval to actual disbursement and implementation. And another very important issue that I use the acronym for value for money, but basically, are you capable with your modality of doing value for money analysis or other cost benefit analysis? Because this doesn't only mean that you will do certain assessments and then decide if it's cost effective or not. You need to have IT and financial management and project management systems in place to be able to track how much money you're spending on different results, and then comparing how much they cost. So you have to look at your modalities, whether they're capable of doing that for you or not. Same thing about the effectiveness of your modalities. Some things about basically here that I listed in the parentheses are just making whether your structures are flexible or not, whether you can do earmarking, carryovers from one year to another, multi-year budgeting, is it possible, refinancing, but then also some of the key REDD issues, whether they can be addressed using that modality. And the last point I put up here is co-benefits. Since many countries, REDD Plus is not only about reducing emissions, but a lot of other social and environmental objectives are also important for the country. They need to look at the funding modalities, whether they are capable of contributing to those co-benefits. And this is very similar to the analysis that we would do under the first question on this slide, coordination with national policies and basically being able to accommodate multiple results and objectives. So when you have thought through these things and analyze your existing structures, then you can think about what you can create. To be able to do that, we usually try to find an explanation for that specific shortcoming in the modalities described, like, for example, why you could not disburse on time, or why that modality would not disburse on time. Let's say maybe there is something wrong in the decision-making procedure, or maybe that modality was not able to switch or move items among different budget lines, and that is because the law doesn't allow it. So trying to find the reasons for these shortcomings, because maybe they can be easily modified, reduced, and adjusted, or maybe we find that the reason behind it is so profound and so fundamental that it's beyond the scope of REDD Plus to change that. So instead of adapting the modality, they choose, to create a completely new structure. But here again, as I mentioned, you may not want to discard everything that the existing structures offer. So you may, during the analysis that I have just very briefly explained to you right now, you may be able to identify certain elements of these funding modalities that you will be able to reuse in your new structure. And I think it's also very important to note that when people have a tendency to create new structures, because it's a very uplifting thing, creating new things. But it's very important to look at the cost and time implications of either decision, whether maintaining or using existing structures, just modifying them a little bit to be better suited and fit for purpose, or you create a new thing, how much that would actually cost and how long it would take, because maybe then the effort in creating something new is not worth it. So this kind of work is something that we are piloting in a couple of countries, and here on the slide I put up just 2 examples for you that are a little bit different from each other, so this is why I chose them. In Nepal, we have been doing a comprehensive assessment of the different funding arrangements in the country and past experiences, and are assessing them using some of the criteria that I mentioned in the previous slide to come up with options that we propose to the government, which afterwards can make an informed decision. In Kenya, what we have been doing was looking at the benefit sharing arrangements in land-based carbon projects that are being implemented in the country already, and use lessons to inform the implementation framework design process that the country is doing. So looking at how actually the benefits have been distributed and analyzing it according to a number of criteria, and then based on that provide recommendations for the government when they come up with a design for the benefit sharing of the whole country. The second support area that I mentioned to you was at the beginning of my presentation was our support with the setting up of national Red Cross funds. And here I just highlighted 2 examples. One is DRC and the other one is Vietnam. Both countries are in the process of designing their national Red Cross funds because they opted for a fund-based approach. And in DRC, we're actually supporting the operationalization of the fund, including, we're helping with the organizational structure, the decision-making procedures, and the fund portfolio development. And Vietnam is currently, they decided to set up a fund, but it has not been decided yet how that fund would look like in general terms. So they're working on a concept mode, and we're supporting the development of this process. And then the third topic that I mentioned, and then I will finish shortly because we don't have a lot of time left, is that in addition to these very specific support programs that we offer to countries who request our assistance, we also organize knowledge exchanges on this specific topic. So we have gathered a quite impressive crowd of countries who are currently developing national fund management arrangements. And together with the FCPF of the World Bank, we organized a workshop last May where we asked the countries what are the actual topics, questions, issues, problems that come up during the fund design process that they would like to know how the other countries are grappling with. And based on this planning workshop, we identified 5 major areas, 3 of which you can see already on the screen. The first 2, the disbursement modalities and the alignment of national funds with strategic goals, was the topic of the first workshop that we held last month, actually in October in Oslo during the Oslo exchange as well. So we looked at kind of different fund disbursement modalities, what are the advantages and how they are designed, large, small scale, result-based payments, targeted or competitive, or how the countries have been translating their national REDD Plus strategies into fund portfolios that can then be proposed for donors or other kind of support. Then the next big topic that the participants and the countries identified as key is issues about fund governance, so how the funding flows are sorted out within the different parts of the fund and from the donors to the fund to the various beneficiaries, how multi-sector coordination is reflected in fund governance, how multi-level coordination between the different levels of government, national and subnational government, is reflected in fund governance. And this topic will be the topic of our next activity that we'll organize in January, a webinar. And then we have two other topics that the participants identified: sources of funding, planning under uncertainty, about how to ensure long-term sustainability, importance of raising private sector funding, how to leverage domestic resources, etc., and safeguards. Basically, how to operationalize safeguards in the context of the fund. So this is more than just coming up with national standards. It's how you build these safeguards into the fund decision-making processes, so project appraisals, or monitoring and evaluation, and different environmental and social management plans that projects may be required to submit. So these two topics will be dealt with next year, but we don't have dates yet, so I haven't put up anything. So this was just a very, very quick overview that I thought, I hope that it helped you understand a little bit of how our program supports the national management of REDD Plus funds. And I'm now handing over to Jacinto, and if I understood correctly, after the second presentation, we'll have time to discuss and answer your questions. Thank you very much.
Thank you, Berta, for the very interesting presentation and insightful presentation, and thank you to WWF for inviting me to present today. My name is Jacinto Coello. I work for UNEP Finance Initiative on REDD and sustainable land use activities, mainly in the Latin American region. And I'll be speaking to you today about some private sector perspectives that we have identified and that can be considered for REDD Plus performance-based payments. And in doing that, I hope that I complement Berta's previous presentation. So a few words about who we are. We are a partnership between UNEP and circa 230 financial institutions globally, mainly comprised by banks, around 60%, but now there's a growing number of insurers and some investors. We have the entire supply chain of capital represented in the partnership, ranging from large pension funds to microfinance organizations operating in particular regions in certain countries. And we also count with some representatives of national development banks. We started working on REDD in 2011 with the Ready, Set, Grow series that you might be aware of. The main, I guess, objective of that work was twofold. One was to inform financial institutions on what was REDD. It was a relatively new acronym for them back then. And second, how we could work with policymakers to develop a more, I guess, favorable policy framework that could stimulate private sector investment and activities in the land use space. That led to a collaboration with the UN-REDD Programme, and UNEP is now the key delivery partner for the program with private sector engagements. So these are the topics I'll be briefly speaking about today. The first is some private sectors and some private sector perspectives on result-based finance. Secondly, how or what should REDD Plus results-based finance look like according to this private sector perspectives? And then lastly, what are some of the conditions needed by the private sector to actually scale up and deliver on REDD Plus? So I think it's important to start with some fundamentals and establish them from the beginning, and that is that upfront investment usually for these activities requires that there exist ongoing sources of revenue. And there is much talk about private sector finance for climate change mitigation, but the level of specificity about these conversations is relatively low. And so I think we need to ascertain from the beginning that private finance can take many forms, and if you look at the slide, for instance, for REDD, it can be in the form of loans, of equity, even prepaid airpass, or using mechanisms such as bonds to raise that initial finance. But it will be very, very hard to deploy this mechanism or to raise this initial finance if there is not an ongoing revenue source that can be, I guess, identified from the beginning by these private sector actors. And that usually takes the form of emission reduction purchases for whatever the reason is. It's either performance or results driven. What now we're looking more and more at is this link between, for instance, commodity buyers and REDD. And more people are looking at relatively innovative ways of securing this ongoing source of revenue via specific taxes that could be transferred to REDD. Next slide, please. Thank you. Before I start with the lessons, I think it's also key that we differentiate between enabling investments, that is an investment that could perhaps not necessarily generate revenue, but create the conditions that can lead to that revenue being generated, and asset investment, where I guess it's finance for an activity that could create tangible value in the short, medium, and long term. And this is what I was speaking before about loans and equity investments, and perhaps even using mechanisms such as bonds to do so. So having established that, I think I can go ahead with some of the lessons we've identified. And the first one is that if there is a well-designed incentive structure, we consider that private sector capital can flow at scale. Even with the current conditions we are seeing in the finance sector, where we have higher capital requirements for banks, we still consider that private sector capital can flow into green investment if there is a robust business case and if the right conditions are in place. And we've seen this happen, for instance, in the renewable energy sector in the past couple of years. And having said that, it's also very important, I think, to say that that this private sector capital is also very sensitive to unfavorable changes in policy. And you might all be aware of this example that we have on the slide, which is what happened with the Spanish feed-in tariffs in the last couple of years, where let's just say that the private sector was not able to mobilize as much funding once the conditions were removed. I think we need to ask ourselves a couple of questions here. One is we need to consider whether these examples can be replicated in emerging markets in the land use space. And secondly, and perhaps more importantly, we need to ascertain concretely what exactly are these favorable conditions and how do they look like. Next slide, please. So how do these policy frameworks work, and how can we mobilize private sector finance and investment for land use activities? So as we saw from the previous slide, investment in green activities is to a large extent driven by government policy. And long-term and predictable policy that we call, and what UNDP established as the 4 Ls, long, loud, legal, and light, is the one that we think that can provide the framework for investors to mobilize capital at scale, where long means that we need to match the investment timescales and the policy timescales to have some, I guess, predictability in the policy. And we have a couple of examples here in the slide where you can see, for instance, Gavi used an AMC for a vaccine that range between 10 to 25 years. Secondly, loud, meaning that the intervention makes the targeted activity more commercially attractive than business as usual activities. Legal, that we have the ability to create long-term, large-scale, contractually binding agreements. That is very, very important for the private sector. And light, we must have policy that is, I guess, cheap to adhere to. Lesson 3 is that once we have suitable incentives, we need to have the initial investment for undertaking the activity. And as we know, due to a variety of reasons, a lot of these green activities have higher upfront finance requirements than your traditional business as usual activity. And that can lead to perhaps a first mover disadvantage, as it's called. And we have an example of that happening in, for instance, the renewables sector, especially in the developing world, that it faced a very significant financing bottleneck that was not addressed by public funds nor private funds, and that led to a lot of activities not being undertaken in the medium to long term. So I guess the lesson we're trying to convey here is that even if results-based payments are key for REDD, access to finance will be critical too, and we'll see more of it in the next slide. So we have now, let's say, an incentive structure that is well constructed and results-based payments already in place. But we need to think about who exactly will be supplying the finance, as the landscape of the suppliers is quite varied. Again, drawing from the renewable energy sector, evidence has shown that, for instance, much of the investment that has been made into the sector has been into private equity and private debt vehicles. These vehicles, as you might know, are of longer tenure and less liquid relative to other assets that are more, I guess, accepted by different actors in the market. So many large investors cannot invest into these vehicles, and that already creates a little bit of a bottleneck in the financing that can be directed to these activities. I guess what I'm trying to say here is that if we have all this, or this very large pool of private finance, but we need to start thinking about how it is that perhaps REDD actors will access this capital, and which are the activities that need financing, and how will capital be connected to them. And it might very well be that we require creating new instruments and mechanisms to connect this capital to the activities. And for instance, we've seen how this has been dealt in other sectors, such as rights for real estate, giving exposure to investors to a sector and that is relatively less liquid. And we've seen the same with TMOs for timber. And so we now have the, I guess, the supply of finance. We need to also understand who exactly it is that that needs the finance, and this follows also, again, even with a very well-designed incentive scheme. And this is something that Berta was speaking about earlier, but from a public perspective. And we need to understand that lenders have very different parameters to determine who do they provide finance to, what is the deal size they feel comfortable with, and what is the risk that they are willing to take, or their so-called risk appetite. And if you look at this chart that we adapted from a Dalbert presentation, you'll see that we have a range of deal sizes and a risk tolerance depending on the type of vehicle and on the type of, I guess, actor that is trying to access this finance. And from what we've seen in the market, we've understood that a lot of these forest enterprises are usually SMEs, and they usually can have a size that is too large for local finance, but too small for international sources of finance. So they go into this so-called valley of debt, where they cannot, I guess, access the necessary finance to implement their activities. And I think that one of the things that we need to start thinking about here is how we can aggregate this different type of activities and with the intention of keeping the transaction costs low. And there is a lot of thinking happening around this space, and I can speak about that more offline if anyone's interested in it. I think this is also quite an important lesson. We must not lose eye of what the actual underlying conditions are. So even if you have a very well-designed structure of incentives for REDD+, this might not mean that it's going to be more commercially attractive than business as usual activities if the underlying conditions favor this business of as usual activities. So we need to, for instance, ask ourselves, what are some of the underlying conditions driving finance and investment into activities driving deforestation? What, for instance, is the role of fiscal policy in this? And whether we have some specific laws creating perverse incentives for deforestation. Some of the work that we're trying to do right now is looking at how agricultural subsidies prevent a level playing field for REDD, and how, for instance, could this subsidies be redirected or rethought so that we would have a double dividend for REDD. And if you look at the graph in the slide, you'll see this from a very interesting report by the Overseas Development Institute. What is the ratio between fossil fuel subsidies and climate finance? And we think, and our, I guess, initial scoping has shown that the ratio is similar, if not more, I guess, directed towards subsidies in the land use space. So in some, I guess, of the 6 lessons, what I was trying to convey is that we need to consider what the incentive structure is going to look like, but we must keep in mind what the supply and demand for finance also looks like, who are the actors supplying the finance, who are the actors demanding the finance, and never lose sight of this bigger picture, which are, I guess, the underlying conditions holding the specific sector in the economy. So what should results-based finance look like? Just a brief background on this publication, Berta Pesti Grow. It was produced for policymakers to provide information on what REDD+ architecture needed to deliver to effectively mobilize private sector finance and investment at scale, considering different approaches discussed at the COP. And it relied, I guess, on extensive input from the finance sector and some DFIs, so it made it quite a robust exercise of thinking for, I guess, assessing the different REDD scenarios. It is no surprise then that, I guess, given the experts we consulted for this publication, they all suggested that a nested approach, which in your slide shows as item number 3, would have the highest likelihood of mobilizing private sector capital at scale. And sorry I'm rushing to the presentation, but I have a couple more slides that I want to show you. And you can look at this chart in more detail in the Berta Pesti Grow publication. What were the key takeaway messages of the publication? Well, if the private sector is going to become fully involved in REDD+ financing and implementation, it needs to invest at a scale where the risks and opportunities are clear and they can be managed. I guess this latter part is really important. We need to have, as we saw before, predictability of demand. Otherwise, it's very hard to raise this initial investment. Again, a clear and long price signal that can be used to forecast revenues and calculate the reasonable rate of return. So we need to be able to, I guess, assess the internal rate of return of an investment, and that depends on the predictability of demand. Then transparent criteria for participation and stable policy over the long term. And there's nothing that perhaps pushes the sensitivity of investors as drastic changes in policy, as we saw, for instance, from the Spanish example at the beginning of the presentation. Then this is something that is quite important. I guess serious private sectors actors have a high level or look for activities that have a high level of social and environmental safeguards, as this will help them manage their operational and reputational risk of whatever activity they're implementing. And all that I'm saying here is not inconsistent with implementation of REDD in national programs or subnational REDD programs, especially when you start thinking about nested approaches. But this will depend on having the right crediting structure that is tolerable for both for the government and for the private sector institution, and the right accounting framework. Last thing I'll mention here is what are some of the conditions that the private sector is looking for or would be looking for to scale up and deliver in REDD. Firstly, we need to start thinking how the private sector thinks, and it's basically thinking in terms of risk and return and tenor. Capital will not be deployed into REDD activities unless we can calculate what the risk, return, and tenor is for REDD Plus. And we are currently facing a situation in REDD where the risks are very high and the returns are very low, especially when compared with other agricultural activities. Second, we need to start creating a more compelling business case for REDD through the creation of this enabling conditions that could perhaps shift the balance and increase the returns and lower the risks of investment in REDD activities. And last, I think we need to start focusing more on the positives of private sector participation than on the risks of it, to have a more nuanced discussion about how it is the private sector can come and make its meaningful contribution for REDD Plus implementation. What are some possible next steps for doing this? I think we need to continue working on narrowing what we call the perception gap between different REDD stakeholders. REDD still means different things to different people, and perhaps just making the conversation more informed would help in this. We're working on this at UNEP by facilitating dialogues between public and private actors. Again, ensure that we have the 4 L's represented in REDD Plus policy, and start looking at innovative mechanisms for REDD, for instance, AMCs or advanced market commitments. The development of a more robust business case for the private sector. What is it that we're talking about? What is the exact value proposition for them? And last, ensure that there is access to finance considered when we start speaking about results-based payments, and that we do not lose, I guess, our sight of this fact that we need result-based payment, but we also need to raise the initial finance and investment to undertake the actual activities. Thank you.
Thank you for those great presentations. And we actually have some questions that have already come in. So at this point, please, if you have questions for either of our presenters, you can use the question tool on your toolbar to submit them. and we will answer as many as we have time for until the end of the hour, and then we will hopefully have a chance to follow up with any remaining questions on reddcommunity.org. As I mentioned, you'll get a link in your follow-up email to where you can find follow-up resources. So the first question, and this I believe is probably for Berta because it mentions Vietnam. And the question, Berta, is for Vietnam, how is the envisaged national REDD Fund going to relate to Vietnam's SPRCC support program to respond to climate change, which is financed by a consortium of bilateral and multilateral donors?
Okay, thank you very much for the question. It's very timely because I just returned from Vietnam 2 days ago. We had a consultative workshop on the design of the National Fund. It's an important question because actually one of the things that was discussed during this workshop last week, and one of the points that I highlighted in my presentation is that these different funding modalities must ensure policy coherence. Now, currently, the way it stands is that there is a prime ministerial decision that approved the National REDD Action Plan that dates back to 2012, 1.5 years ago, that, among others, identified the Ministry for Agriculture and Rural Development as the lead agency for REDD+, and also specified that a National REDD+ Fund will be created and that this will be a trust fund under the Vietnam Forest Protection and Development Fund, which is also known as the UNFF. So it appears currently that the fund will be integrated not into the climate change architecture, but into the REDD and the forestry architecture. And it still remains to be seen because the documents are not final. As I mentioned in my presentation, there is a concept note that the government is working on and is consulting with different stakeholders, is how these linkages to other sectors and other related initiatives such as the climate change initiative will be addressed. So just to summarize, everybody is aware of the importance of coordinating, but the details have not been sorted out at this stage yet.
Great, thank you. And the follow-up question for that, which is also about the DRC case that you mentioned, is as follows. For the National REDD Fund in DRC, how do you strike a balance with the support provided by the Congo Basin Forest Fund? And are there any demarcation of roles in supporting this REDD process?
Yes, one of the challenging issues that we have been having this year was actually to identify basically a niche for this fund. What the government decided this year is after the publication of their framework strategy, which covers more than 20 years and would require billions of dollars to be implemented, they identified 2 implementation modalities that they would like to use for the implementation of this REDD strategy. One of them is the FIP, the First Investment Program of the World Bank, and the second one is the National Fund. So basically, a lot of the policy reforms that will be happening at national level in the area of agriculture, energy, land tenure, land use planning, will be an alignment of other development policy with REDD+ objectives will be funded by this fund. The portfolio development of the fund is not finalized, and so we have these guidelines that I just mentioned, like the implementation of these national reform policies that will be done by the fund. But because the portfolio is not fully developed, it will be decided during the selection process, when we have to look at additionality and making sure that whatever is being funded, supported by the fund, is not already covered either by the FIP or by the CDFF. So it's in the project criteria of the operational manual that makes sure that there will be no overlaps, but hopefully complementarities.
Great, thank you. So the next question is and I suppose this could go for either of you. So knowing the current context, i.e. no UNFCCC related commitments and low prices on the voluntary markets, where could REDD finance come from within the next few years? Does either of you want to tackle that one?
Berta, would you like me to take that one? Would you like
Yeah,
to take
go
that
ahead.
one?
Yeah, go ahead. I'll compliment if I have anything smart to say.
Yeah, that is a very good question, and I think is the billion-dollar question currently. And I think the way we are looking at it at UNEP Finance Initiative is that we see two, I guess, different spaces for REDD, or what could translate into REDD plus financing. One is carbon and payment for environmental services, where you would have market mechanisms, either voluntary and I guess compliance markets. We're looking at California, and perhaps that might lead to something else in the medium term, and that would create a more or a stronger demand for REDD VERs. We're also looking at funds and other non-market mechanisms, the FCTF, that carbon fund that I think Berta was mentioning before, and bilateral funds such as Germany's REDD early movers. But importantly, we're also looking at another stream of potential sources of finance that we're calling prize for sustainability. And these are perhaps things that we are not calling REDD at the moment, but achieve, I guess, reductions in emissions from deforestation and forest degradation without them being credited for. And these are both supply and demand, I guess, levers that you can I guess, have access to. And we're looking at it more from the commodity side. So we're looking at a lot of initiatives that are willing to place some funding into, for instance, phasing out deforestation from their supply chains, and we consider that that is also a potential, I guess, large or significant source of funding in the medium term.
What I would just like to add, and maybe a little bit summarize what Jacinto was saying, is our take on this is that currently it looks, and probably it will continue to be this way, is that the sources and the disbursement channels are very fragmented, as opposed to what we thought REDD plus finance would be. And one of the challenges that government face is basically to make sense of this mosaic of funding sources and creating structures in their countries that are available, that are capable of tapping into these different kinds of funding sources. So I think there's a lot of effort and capacity building that is being done, that needs to be done also to make sure that countries can follow this highly complex process and basically take advantage of this diversity of different funding sources.
Great, thank you for that. So the next question is for Berta, and the question is, national REDD funds will likely be expected to do all of the things you mentioned: manage funding from different sources, make various types of disbursements, involve many beneficiaries, and so on. Are countries, A, establishing separate funding windows with ad hoc governance mechanisms, or B, are they trying to develop a flexible governance mechanism that can manage different types of financial instruments and portfolios? And that's a long question if you need me to repeat any of it.
No, I understand. Thank you very much for the question. Actually, there are very few countries who are advanced enough to be already at this stage. But so far, what I have seen is that they are actually trying to create one or two windows or sub-funds to actually accommodate for a specific kind of disbursements. Just an example, in DRC, the fund has three windows. One, a traditional ODA window that will support basically phase two activities, a lot of policy reforms, demonstration activities, etc. A second window, which will be a 3S window, that would be result-based but measured by proxies. And the third one is supposed to be a carbon window that would actually sell verified emission reductions. And then all these different windows will have different decision-making processes. The whole governance structure will be the same. It's more the project criteria that will apply and the monitoring and evaluation that will be different for these.
Thank you. So the next question I'm going to read in just a minute, but as you're answering the next one, I'm going to have this screen up so you can see a few of the resources that we have available if you'd like more information about WWF REDD work, and then the next slide I'll show is some resources from Jacinto and Berta. So the next question is for Jacinto, and the question is, could you please explain more about advanced market commitments? Voluntary market projects implemented under the VCS are struggling with low demand for credits. Large-scale compliance markets seem to be required. Would AMCs involve the UNFCCC and other multilateral donors in creating future price guarantees?
Yeah, thank you for the question. That is also very timely. I think you're correct. Large-scale compliance markets seem to be required to support REDD, and what we're thinking about with advanced market commitments would be to create a sort of interim facility that could support the market from now until 2020, when we're supposed to have the GCF rollout. I think one could look at different advanced market commitments. One could see an advanced market commitment setting basically a floor price for REDD VERs, but we could also look at AMC that could perhaps look at paying a premium for commodities that have been produced sustainably. And this is an idea that is it's getting a lot of traction, both with I guess the environmental NGO community, but also with some of the donors, and that they'd be looking at perhaps creating such a structure for supporting REDD.
Great, thank you. And so we have one final question, and the question is for Jacinto, and it's just about a resource. An attendee asks, where can I find information about the Price on Sustainability initiative you mentioned? And perhaps it is...
No, sorry. That probably was an oversight on my end. We're not looking at we're looking at a mosaic of sources of finance, and we're calling one of them, which is a plethora of initiatives. And if you want, I can send you some resources if you email me after. But we just call it Price for Sustainability, and it's I guess all the activities that lead perhaps to deforestation being reduced, but that are not currently being called REDD. So for instance, things like what the Consumer Goods Forum are doing, or the TFA 2020.
Thank you for clarifying. And if we need some more information, I can put this person in touch with you to follow up on that. And that will do it for today's session. Thank you again so much to Jacinto and Berta for those wonderful and informative presentations, and thanks to all of our attendees for asking insightful questions. Just to follow up, as I mentioned, here are some of the resources from the UN-REDD program, and you can find them all at reddcommunity.org/content/REDD-finance. I will also post a recording of this learning session up there within the next few days, so look for that. And to remind you, you'll get an email after this session with the link to that webpage right in your inbox. So thank you again to everyone. We hope you enjoyed this session, and we hope to see you at the next learning session. With that, I will bring us to a close. Thanks again.
Thank you.
Bye.
Bye-bye.